Hey guys, welcome to the webinar. My name is Mark Shaw's the Pattern Trader. I'll be starting in just a moment, but in the meantime, go ahead and put your name and where you're from in the chat box here. We've got Sven, we've got Chico. So there are going to be so many people here. I'm sorry I can't name everybody. We've got so many people who signed up for this, got 119. Hey guys, welcome to the webinar. My name is Mark Shaw's the Pattern Trader. Sorry, I've got to, in just a moment, but in the meantime, go. Please let me know if you guys can hear me and see me clearly. Still kind of getting used to a new technology here. So I'm trying to simulcast on YouTube. Okay, thanks. So I just had to cut off the double sound here. Hey, GK, how are you? Nice to see you in the mornings. Israel, Ahmet, nice to see you on YouTube here. So I'm going to give this several minutes. We've got so many people streaming in. So just take it easy, get a cup of coffee, whatever you need to do. Thanks, Sean. I appreciate that. So we get started in just a moment. Maybe you guys can tell me what you've been up to, what you've been trading. Markets have been, so hectic lately. AJ, you're welcome. Mustafa, great to see you. AJ says, so eager to learn from you. So I hope I can shed some light. I've been trading more than a few years and learned the hard way, right? Learn by doing. So my dad used to say that, I've written a lot of books on trading, and then he'd add checkbooks, right? So, I fell into a number of potholes and along the way tried to learn something to avoid them the next time. So Aaron says, I'm a newbie. This is my first webinar related to the stock market. So, really, I'm going to cover all markets. I'm going to tell you how you can look at any trading market. So I would trade two flies running up a wall if they could make a market in it. And if there was a low and high and a way to evaluate it. So I was a stockbroker for many years. I was a commodities broker. So I've traded everything under the sun. And so it doesn't really matter what you're trading. I'm trying to give you the tools to, on these webinars, I try and give you the tools to evaluate great opportunities and then also how to, avoid the inevitable pitfalls and traps that the market set. So we'll talk about all of that. So Daniel asks, is gold at a double bottom? I'll take a look at that. It is close to a very serious part on the chart that, will create some volatility down here for sure. So we have 200 participants on this webinar, so fantastic turnout. So Bill says, I did Mark's 4-day free webinar 2 weeks ago. I went short the euro, long the pound New Zealand. My paper trade, $100,000, was up 13% a week later. So yeah, I've been killing it in the market. Some people come on, they call me, a fraud and a scammer and what have you. But, I show you what I'm doing in real time, and then you can see how the trades work out over time. So, pretty difficult to, contest that. But I've been making just a ton of money for the last 2 months. I started going long the stock of Lyft, bought it at $45. It went to 68. I started shorting the Nasdaq right at the high when the QQQs were at 334, then they dropped to 300. And I've been short Beyond Meat, BYND. So I'm going to show you what I do and how I do it. It doesn't mean that because I'm making money, you will. It's taken me a while to get here. It takes a whole different mentality because a lot of people are very short term. They pull up a chair, pick 3 hours of the trading day, get their favorite moving, indicators out, and try and find a small move, on an individual market, and that's exactly the opposite of what I do. So I look for the big moves in the markets, and I look to take a piece of the middle out of big moves, and that's really what I do. So I'm just going to wait a little bit so we can all get settled, and then I'll do a formal introduction, then we can kind of get going. So what is it? A few minutes. I'll give this another 2 minutes. We have 230 participants, so fantastic turnout. Really appreciate it. And hopefully we can talk about a thing or two. So Brendan, brokers do go broke. You have to identify the big ones. Tanya says, just wondering, do you have high holding costs on trades? So there are something called swap fees, Tanya, which is an additional fee that the broker tax on when you hold a currency position. The swap fee is assessed every 2 days. And, it's just the cost of doing business. So if you run a restaurant, you have costs, right? You order veal for 50 people and 35 people show up, and you got to throw some of your stuff out, and it's just the cost of doing business. But, I would argue that the cost of holding a trade, and incurring the swap fee is a lot less than swapping in and out, than trading in and out 10 times a day. You don't really see the fee because you're paying, that 2 or 3 pips on every trade. So it's a hidden fee, but believe me, it adds up much more than the swap fees. I love finding a position and feeling comfortable that I'm going to be in that position for 3 months. And I know I'm going to, tack on a whole bunch of swap fees, but I'm also going to tack on a whole bunch of profits too. Okay, so why don't we get started? Welcome to this webinar. My name is Mark Shawson, the Pattern Trader. The title of this webinar is How to Make Profits by Trading Just on the Weekly Price Charts. And just by way of introduction, for those of you who don't know me, I've been trading for more decades than I'd like to acknowledge. I got started when I was in my second year of college. I got introduced to this investment banker, guy named Graham Loving. You couldn't make that name up, but it's true. Guy wore an eye patch, and was a very eccentric guy and very, very brilliant guy. So by day, he was an investment banker, and then, he was also on the side trading the commodity futures markets. Now, this was in the late 1970s, and I don't know how many of you remember back to that period. Interest rates went to 21%. Gold was the first time it went from $200 to $1,000. Silver was at $50. Soybeans, pork bellies, everything was going crazy. This guy was trading 30 markets at once and making a ton of money. And it wasn't only that he was making a ton of money that intrigued me. It was how he was doing it. He was just, plotting the prices on some graph paper. So this was before the internet. This was before the days of great charting services. And he just got a piece of graph paper, plotted the close of live hogs and cattle and soybeans and orange juice and cocoa. And he just told me, Mark, I want to buy a market that's going up and sell a market that's going down. And so I'm not very bright. And so that really, kind of, intrigued me, just simple, something that you could reduce and a 6-year-old would understand. And so I really gravitated to looking at trades just by their price history. And, over the 4 decades, I, developed my own, kind of toolbox, that gets me closer and closer to the bullseye of, a great trading opportunity by, first identifying if something's in a trend. So if you open up a chart's going to be going up, it's going to be going down, or it's going to be going sideways. So I like trading every market condition except a sideways market condition, because I'm looking to make big moves in the market. I'm not looking to steal 10 pips here and 40 pips here and have a heart attack that, if it doesn't hit my take profit, it's, the trade's going to escape from me. So I'm looking for 150 pip moves in the currency markets, 300 pip. I think the pound New Zealand dollar could go up, 1,000 pips. And so I'm looking for, those big trading opportunities and then taking my piece out of the middle. And I'll show you in a moment, what I've done recently, how I do it. And, so I made all of the mistakes over many decades trying to refine what works, what doesn't work. Like everybody else, I love trading. I see trading opportunities all the time. And that was really the problem, was that I was looking at, trading on 5-minute charts, 15-minute charts, 1-hour charts. I'd see a double top here. I'd, see these chart patterns on a 15-minute chart, and I would get so excited. And then it took me a long time to realize that, when you trade on a 15-minute time frame, your objective is so much shorter. So by nature, I'm always looking for the bigger moves. I never understood, if Zoom, is going to go from 600 down to 300, why, people just trying to take a few dollars every day out of that move. I'm just trying to take hundreds of dollars out. And so that's just my mentality. It's my disposition. I want to make big money in the markets. I don't want to, so it took me a long time to figure out. And I also had a lot of demons. I would overtrade. I would be very emotional. So I always had a great ability to spot trades, but then I also had a great ability to, self-destruct. And I had to build a whole toolbox in order to build firewalls so that I wouldn't go into the potholes that I created by my own, propensities for overtrading and self-destruction. And so, I kind of whittled it down that I want to make, trades that participate in the big moves in the market. And I don't want to overtrade, and I don't want to self-destruct. And so based on that, it's like, how do you overcome all that? And in order to do that, you need to kind of slow everything down. You need to make the markets come to you. You shouldn't be reacting to it. And so when we see these moves on a 5-minute chart or 1-hour chart or whatever, and you see something going, it's like your tendency, you want to grab a foothold in that momentum. And so the way I became very, very successful was figuring out how to slow everything down and see the big picture. And that's why I maintain that, for experience and especially inexperience, that the best way to do is to slow it down, see the big picture, and, create a risk reward, that's going to, help you take a piece out of the bigger moves. And, if you don't do that, you're always going to be in this churn cycle. You open an account, you burn through it, you wait till you got enough money, you open it up again, and you churn through that. So, I'm sure you guys would agree that many of you have been on that cycle, right? Where you get so excited, you open your account, then you get sucked in, and before you know it, you've traded so many times on a 5-minute or 15-minute chart. Now you've burned through your money, and now you're waiting to reconstitute your account. So let me know if you agree with that in the chat box. If you've been through some of those cycles, because I know I have. And so the best way to do that is to, so Kathy says, I'm one of that. Eric says, yes. Kenneth says, oh, yes. John says, so Mustafa says, wow, Mark, you described me 100%. Glenn says, most definitely. Michael says, I've been to hell and back. Sorry, these comments are coming through so quickly. Tom says, trade too many positions. I'm overwhelmed. Rob says, yes. Duncan says, yes, I've been there many a time. Rashad says, yes, many times. So look, the markets are about human nature. We all, it's really funny because if you think about it, markets are going up or they're going down. So then, if it's that simple, why is everyone losing? Because we can't control our psychology. And so you have to be completely objective about trading. I was short the Nasdaq today. I was short Zoom. I was convinced that, the things were going to keep going lower. And then the market started to tell me that, hey, this wasn't happening. Every time the market would try to go down, it couldn't go down. Zoom made a new, low and then popped right back into the range. And so I basically got out of everything, because what I was, while, I thought something was going to happen. I've been short Zoom since $347. And it got to about, I don't know, 305 today. So I was making a huge amount of money. But then I saw it made a new low and then it came back in and, and so I can think one thing, but I have to react to what is happening. And so I just blew out of my position. And so you cannot be emotional. You can't get married to a position. You can't be, you have to be very objective. And, if I look, over the last couple of months, I've literally made millions of dollars. I know people make these claims and whatnot. I'll show you some of my trades in a moment. But I think, and I've also lost a ton of money, in between this time. But where I've gotten to is that I just look at the trade now. I don't even care. My heart doesn't skip a beat. I made $500,000 in 2 days, 2 weeks running. And, my heart didn't even skip a beat. It was like I closed those trades out. And now it's like, okay, what's the next setup? And so to me, it's always about the market, the setup. And so I don't even look at the money anymore. And then, 3 weeks into it, I was so convinced the market was going down. I kind of lost my vision. The market's bottomed at 300 in the QQQs. They bounced to 310. And then I thought with that bounce, I'm just going to short into it. And I lost $80,000 in, a set of options that expired worthless on me. And that's an incredible amount of money. If I stopped and thought about losing $80,000, I'd get sick to my stomach. But I don't think in those terms anymore. I made money on this trade. I lost money on this trade. I learned by my losses, and now I just move on and look at the next setup. And so by doing that, I've made millions of dollars by dumping trades that aren't working, making gargantuan wins, and looking for the opportunities. And, it's like I have enough confidence in what I'm doing that even if I go through a couple of weeks or even a couple of months, trading is a process, right? So sometimes the markets just get really squirrely where they go into a consolidation and you're not getting anything or you're losing or what have you. But to me, I get excited because the more I'm losing, the more I know I'm getting closer to that big winner where I'll just find something and it'll take me like a wave all the way into the beach. So let me show you what I'm talking about. These are some of the trades that I've identified on the weekly chart. So this was February 19th on a Friday. This market closed on the low of the bar. This was the Nasdaq. I'll go to it in a minute. And it was right at the top of what I thought was an ascending, broadening price pattern, which is inherently bearish. And I thought that prices would at least come to the lower end of that pattern. And so when I saw that on Friday, I bought a whole bunch of put options, over the weekend. After I put them on, I thought, I thought I went mad because, I dumped like 100 grand into these options that expired the following week. And if I was wrong, I would have lost 100 grand. So what I did was I bought a bunch of put options. These are derivatives. These are a put is a bet that a market will decline. And what I was betting on was that the triple Qs, which is an ETF that is linked to the Nasdaq, so it's really a proxy for the Nasdaq. So if the Nasdaq goes up, you want to buy the triple Qs. And in this case, I thought the Nasdaq or the triple Qs were going to go lower, so I bought put options. Now, when I was buying these put options, the QQQs were trading at a level of 334. And you can see that my strike was 320, 14 triple Q points lower, which is it would require a huge move for me to be what's called in the money. I needed this triple Qs to go below 320 for me to make money, or I was going to lose every dollar that I put in there. So I bought, just in this one account, I bought in many other accounts, 350 of these triple Qs at an average price of around $1. Now, each option is based on 100 shares. So when you see $1, it's actually $100. So if you multiply 200 times 100, just that bet was 20,000. Collectively, 350 cost me about $35,000. Now, if the triple Qs didn't fall by a great amount, I would have lost every single cent, of that by the following weeks. I put them on February 19th, and you can see the expiration was February 26th. So I only had a week to be right about this bet. And as you can see, just 2 days later, I started bailing out of my options that I bought for $1 at $5.85, $5.75, $6.31, and some for $8.10, which meant that I made 800% in 2 days on these options right here. So collectively, I made about 560%, or just a hair under 200 grand in 2 days in one account. Now, I did the same thing in another account, which meant that I made about $500,000 in 2 days. Then the following week, I reloaded, did the same thing on a Monday, and was in a $24,000 loss. You can see that these triple Qs, the 307s I bought 450 of them. And by the end of the day, I was losing half my money. I paid 61,000 for them. And by the end of the day, I was down 30 grand. I lost 50% in a day. And this is, the problem with options. They lose altitude very quickly, and you can lose most or all of your money. So that was on Tuesday. And by the way, I did this on a live webinar. So I'm not making this up. People saw every day what I was saying, what I was doing. And, so by the next day, these, triple Qs that were in the whole 28,000, now we're showing a $58,000 profit. So it turned around about 80 grand in a day by virtue of the market collapsing in my favor. And so I was 24,000 in the hole. By the end of that day, I was up 142,000. And then you can see of the 450, I'd already taken profit, which was not reflected here. And so I made another 400,000 or 500,000 in the follow-on week. So, in a 2-week period, I made 7 figures based on my observation of a weekly chart in the Nasdaq, which I'll draw for you in real time in just a moment. Now, some weeks ago, it was January 10th, again on Sunday, observing the weekly bar. This huge key reversal. This was an XAU USD, which is spot gold. Again, it doesn't matter if you're trading these instruments or not. What I'm really trying to elucidate here is how you can evaluate any trading instrument on the weekly chart and make a ton of money. So I suggested to our members to sell short at 1867 in gold. Right now it's trading at 1670, $200 lower. And I said at that time, 2 months ago, for the past few months, gold has been forming an ascending broadening triangle, which is a bear price triangle. So this was 2 months ago, where gold was, again, right near $1,900. Now we're, under $1,700. I said last week's massive key reversal is pointing in the direction gold is going to go lower. I said my target objective, and again, this was January 10th. What is this? 3-4 months ago. I said my target objective is 1,700, and today we went under it, for the second time. So this is the value of looking at the thing from a broad basis. And I was in January already perceiving that we were going to come to the lower end of this support line under 1,700, and that's exactly what's occurred. I added to my position at 1,797. Again, the thing started working in my favor. I talked about the ascending broadening price pattern, and made a whole bunch of dough on my evaluation of this market. Hit my take profit at 1687 and made a whole bunch of money. Recently, I've been saying for a long time, pound versus New Zealand dollar has been in a stealth bull market. This was, on the weekly trade, Sunday, February 28th, about a month ago exactly. I was talking about a double bottom on the weekly chart right here. I suggested to our members to buy pound New Zealand at 193.37. We're currently trading about 196.5, 300 pips higher than that. And here is my open profit right now on pound New Zealand dollar. Some months ago, I was talking about a stock. So I look at every trading instrument under the sun. The stock was KTOS. I was telling our members to buy it at $30 and add to their trade. And you can see that I bought the KTOS call options and made 47,000. I ended up making about $80,000 on that particular call. You can see I was also short Beyond Meat. I was buying puts and I made a whole bunch of money in BYND. And then I was also buying Lyft calls at $57 and the stock went to $68. So, this may look like a magic act, but this is all based on the evaluation of weekly. Sorry about that. I forgot to put this. Let me just, sorry about that. So this was all based on the evaluation of the weekly charts. So I'll put up the Nasdaq, show you what I was looking at. So let me just space this out a little bit. There we go. Sorry, I got so many distractions on my screens here. I can't find what I'm looking for. So this is, I'm trying to find out where to put this here. This is the Nasdaq. This is the stock market in the US. It's chock filled worth of technology stocks like Zoom and Google and Tesla. And it's really a proxy for all of the tech stocks, which have been under a lot of pressure because interest rates have been rising. So while the Dow Jones and the S&P have been making new highs, you can see that the Nasdaq's about 5–7% off the highs. Now, this was the chart I was looking at 3 weeks ago on February 19th. I was conducting my master pattern trading classes. It occurs every Friday at 11 a.m. Eastern Standard Time. I kind of go through, all of my process, look at all of the charts. And, I was breaking apart the NASDAQ on the weekly. This was right the week that we were talking where the NASDAQ made an all-time new high. And then by the end of the week, it closed on the low. So I call that a key reversal. Now, we see many key reversals. You can't just trade these in a vacuum. I was looking at it in context with this pattern where you can see during the pattern, it's rising and the pattern is narrow at the beginning and then it broadens out at the top. It's, and so it's called an ascending broadening price pattern. And so, right when it, hit the top of this, I concluded that we were likely going to hit the lower end of the support level. And if we did, we were likely to go through it. And that's exactly what happened. So this is exactly the week where I started loading up on these put options. And then you can see in the 2 weeks thereafter, the first week and the second week, the market just crashed exactly as I thought it would. And I made 7 figures just on that observation. And so now, we're trading a hair under there, trying to figure out, what this market wants to do right here. You can see this is kind of the zone of opportunity where, we're either going to, bump against here and get rejected, or if we come back, it's likely that we'll go and make a new high. I do think that by coming under the ascending broadening price, that we're likely to still kind of roll over. But right now, the Nasdaq is kind of adhering to a major trend line. You can see this trend line here too. So these stocks have come in, like Tesla today, and a bunch of stocks came and hit this trend line, and they bounced off of it. And so I just want to see if this bounce will hold or it's a fake bounce. But what we have, right here, it's only Tuesday, but right now you can see the range of this week is very small from high to low. And it looks like this is what's starting to happen, is that, we're likely, after these great moves, we're going to, get a period of consolidation. You can see that, these bars now are starting to, just consolidate. So this is what I'm saying, that sometimes the markets, give you a great opportunity, and then sometimes they just, go sideways where there really is nothing. Now, then I just move on to something else and, take a look where else the action is. But really what I'm trying to share with you today is how to make assessments and slow things down. So you can see that week over week, this was a giant, even if we go back here, the Nasdaq was forming an ascending broadening price pattern all the way back. And actually these lines actually intersect exactly with a previous low. I just don't have the low in this picture. There's another low down here and it corresponds exactly. And so you can see how these markets observe certain patterns, and that, when they get to, the high part of the pattern, they bounce off. And when they get to the low part of the pattern, those are buying opportunities. And so what I try and do is put a structure or a boundary around prices, because, if you just open up the chart and look at it, if not really familiar with charts, you would just look at this and say, look, this is really kind of doing nothing. And so, I kind of understand what patterns are occurring in the market. I put the boundaries around it, and then I defer to the market. So this has, been part of my growth, where I used to see, double tops like this, and I did see it at the time. And I thought when I saw that this really spelt that the market was going to be over. It was like a double top, head and shoulders. And I thought this was going to be, one of these things. And I made a ton of money here. But then, the market, I then defer to the market and see what it's telling me. And so I use a combination of price patterns and price action. And what I mean by price action is that you can see right here, the market made a key reversal. So when I talk about a key reversal, I mean something like this, where the market closes closer to the low. So it doesn't have to be on the exact low. But if we looked at this bar, the market would have closed closer to the low than the high. And you can see right here at certain key things, when it's at a resistance level where you make a new high and close on the low, that points in the direction where that market is going to go. Now, remember, this is a weekly chart. So this, went down for several months after that key reversal. But after it went down, it made another key reversal right on a support line. And you can see that these key reversals, and especially the one last March at the height of the epidemic, where everybody thought things were going to go off a cliff, the market was pointing to something else. The market made an absolute new low and then closed on the high. And there was also the size of this bar that then said, hey, we're going higher. And you can see ever since it made that key reversal where it made a new low and closed on the high, every time it did that, made a new low, close on the high, 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 made a new low. And every time it did that, it made new highs. And so, if markets are in trends, there are certain ways that you can look at certain reversal bars or inside bars or certain patterns that will get you in the momentum of that trade. And so, you always want to decide, what is this trade doing? What is the phase of the market? So, right here, the market was going lower. And then, this market has basically been in a huge uptrend for 8 or 10 years. That has been the trend of the market. Now, sometimes the market throws you patterns where you can see a reversal of trend. As I did in October of 2019, I made a ton of money looking at this double top and surmising that the market was going to, peter out at that time. And for, a certain time, the market went down 25% from there. So I just look at, patterns and price action on a continuum. And so this in the main has been going higher. We've seen this kind of uptrend, but now you're starting to see that, the uptrend is starting to falter. And when a trend falters, then I look for a pattern that will tell me, if, the trend is going to change. So you can see that this ascending broadening price pattern was telling me that this is inherently a bearish price pattern and that the price was going to change. And so if I think this is going to fall and I want to take advantage of it, instead of, being, given a heart attack every 15 minutes, because, if I, look at a 15-minute chart. So here's a 15-minute chart of what happened today. And you can see the noise. So if you're trading this on a 15-minute chart, you're bearish, you're bullish, you're bearish, you're bullish. And by the end of the day, you don't know what your name is. It's driven you crazy. It's gone everywhere and nowhere. And so the way you handle a market like this is use a higher time frame, like a daily or a weekly chart, and then create certain objectives around that. So to my mind, the fact that we broke this ascending broadening price pattern tells me that the next move is still likely to go lower. But, I think that we're also likely to see a lot of churn, as we saw today, in this area where, it could, vacillate for quite some time. So instead of getting caught up in all the chop, driving yourself crazy and figuring out what's happened, you could just strategically put a sell stop under this week's low, or, more realistically, 2 weeks ago. So if you put a sell order under there and then you let the market just run into you. So if you put a sell stop here, if the market triggers you, it's likely to go in your direction. And the beauty is, if it doesn't trigger you, then you weren't put in, it goes back up. Then, you could put a buy stop above here. So this thing is really boxed in, and it's hard to tell which way it wants to go. And frankly, when I struggle, I actually go to a higher time frame, which is the monthly chart. So what I'm saying is, if you want to capture the bigger moves, you need to see, what's really happening. And you can see there was a huge key reversal last month where it made a new high, closed on the low. And so this really put a cap, on the market for that period of time. So we're just in this giant, and now you've got a key reversal here this month where you made a new low and closing toward the high. And, and then you can see that both months basically settled in the same area, which tells you there's just been a lot of action with very little result. And so this is where you can lose a lot of money if you don't, know what you're looking at. And so what I really recommend you do is look at the weekly charts. Now, frankly, I could also make the case that by connecting the recent lows that we've even got a bigger ascending broadening. And when I show you this pattern, I'm going to show you it's the same pattern that I've been looking at on gold. So you can see that the market starts out narrow and then widens. And so if we came back down here and hit the lower end, which would be around 305 on the QQQs, then it's very likely that we're going to come here. And frankly, I think here. So I still think that there's a 20 to 30% drop coming in these NASDAQ stocks. And then the question is, how do you get on board? And, what I would do is I would wait. If this was Friday, let's say this was the entire range for the week, I would put a sell stop strategically under the low of the week. Or if you really want to be conservative, put a sell stop under the low of the prior week and let the market. So, you know, even if it takes 2 months, you know, if the market then, or not 2 months, but, you know, several weeks, and if the market hits you there, then it's ready to go. And that's the beauty. You know, I like to, you know, strategically, you know, set up my trades and then walk away and then let the market do all the work for me. You know, so, you know, it could be in the middle of the you know, the night on Wednesday where I get triggered into the market. And then I've got a, you know, stop loss behind it. So I'm not, you know, exposed, but the market puts me in at the time and price that it's ready to go. But the way to do this is to really slow things down. So I showed you how I made a ton of money on gold, and gold is in exactly the same. So let me show you, you know, the power of these charts. This is the pound versus Australian dollar. And what I want to show you is the same pattern that's occurring in the Nasdaq and gold happened in the pound Australian several months ago. So this is really what I try and do at the Pattern Trader, is share trades. And then when you've seen enough of these trades, then you'll understand how the market works. And then you can, you know, capture a move if it's happening on corn or platinum or whatever you're looking at. So this is the same ascending, broadening price pattern. And remember, we call it ascending because throughout the pattern, it's going higher. It starts life in the pattern very narrow and then broadens or widens out at the top. You know, and I started, you know, shorting this right up here at this double top. But, you know, that's another story. So on this weekly trade, you could see that the market, that weekly close, closed under the support line of the ascending, broadening price pattern. And so I knew it was on. Started telling our members, you know, to start getting short. And the beauty of this ascending, broadening price pattern is I knew exactly where this thing was going. We can measure the move when you break out of an ascending, broadening price pattern by looking at exactly where it began. And so when it broke out at 196, I said to our members, we're going to between 175 and 178. And you can see it went to about 174 or just a hair under 175. So it went exactly to that targeted. But so it really doesn't matter what this instrument is. You know, I looked at the Nasdaq, I saw the same chart pattern. I'm going to show you the same chart pattern in gold. And so the thing is, once we recognize this pattern, it doesn't matter if it's on the yen, if it's on, cocoa futures, it's going to have the same implication. And so, you know, when this thing topped out at 2,100 and started going sideways, I was telling our members when the whole world was bullish that this thing is going to, going sideways to lower. And I've been very consistent for 4 months, telling our members that this thing was going down where most people, so you can see the beauty of this. So this was, that trade that I was showing you at, 1867 or wherever that weekly trade was. It was because I was looking at this key reversal right here, made a new high, close on the low. You can see that there's another bar here, made a new high, close on the low. So you actually have this double top price pattern, which is also a bear pattern within the context of this whole ascending, broadening price pattern. And once I drew the support line and the resistance line, I knew right here that it was going right there. And I showed you in my email back in early January, I said my objective is 1,700. And today we're trading at 1,683. So, it's not that, I have this, incredible insight into the, Fort Knox to know what gold is doing. I know how patterns behave and where, what the market needs to do once these patterns start coming together. And then I just assess the price action. But remember, this is a weekly chart. So this slowed everything down. And all I needed to see was this inside bar right here. What I mean by an inside bar is that you can see that the range of that week was within the range of the previous week. And I call this an inside bar or a narrow range. Now, the meaning or the implication to me of an inside bar is that it's a coiling, it's a compression of energy. And whenever you have a, compression of energy, you have like a spring load, afterwards. And so the metaphor I always use is like, picture if you put your hand on top of a beach ball and you press it further and further underwater, and then you let your hand off, what happens? The energy just, explodes. And so obviously it explodes higher, but in this metaphor, because I saw all these bear price patterns, I surmised that we were going to explode lower, as it uncoiled out of this inside bar. And then actually the week thereafter, we had the same situation where you had another inside bar. So I actually added to my trade. So I got short here and here. And so I had two trades short, one at 1841, one at 1797, and then took it for a spin on the downside and got out at 1687 and made 600 grand on that trade. And then I reloaded last week in my weekly video report. I said, get short at 1719 on a stop. Let me see if I can find that, that email. I always like to corroborate what I'm saying because, people can think that you're full of shit. And I understand that. Let me see if I can just find that real quick. I have so much distortion on this computer, I can't see anything. Sorry, I should have had this open, and I probably do. I can't find anything because I've got so much distortion here. Here it is. So this was expressly off the weekly charts. So I talked about what was going on in the week, what I was looking at. These are all weekly charts that I'm looking at. This is the Nasdaq, gold. I said gold trading at the low end of an ascending broadening price pattern. I'm still looking for lower prices. And that was when gold was at 1735 last week, and now it's 1685. And here was my analysis that I sent out on Sunday based on the weekly charts. Put a sell stop at 1719, and the market was trading, I don't know, at 1730. So this is where you let the market just find you. The market just collapsed into my sell stop. And, now I'm making, a bunch of money on that trade. So Dick says, all you guys that are new, Mark is telling us how the price was going to go. Believe it. I saw the prediction. I was new at the time. I didn't buy it. And now I listen and follow. So thanks for that, Dick. I appreciate it. Yeah. So look, I'm doing this in front of you guys. And then you see, I just showed you my Sunday trades, which were 2 days ago. And so all I did was I told our members to put a sell stop right here, 1719. And you can see it was trading, I don't know, 1730. So the beauty of that sell stop was that if the market went higher, you're not triggered. No harm, no foul. You can see the market just fell into me, and now it's trading, $40 lower. I didn't have to do a thing. All I had to do was spend 3 minutes putting in my order and let the market do all the work. I wasn't sitting in front of my screen, looking at 15-minute bars, trying to figure out, which, moving average or Bollinger Band was going to cross to get me in a trade to steal the next 40 pips. I got in here and I'm here. And now I'm looking for here. And pound New Zealand, same thing. For years, I've been telling our members pound New Zealand's in this stealth bull market. This one's been kind of a tough one because it's all over the place, but I've been able to capitalize on monster moves, taking out 3,000 pips, on multiple trades. When I started seeing the double bottom right here, double bottom's exactly what it sounds like. Market makes a new low, bounces off the low, retests the low, and now you have this W bottom. It came and retested the neckline, had this rounding bottom, And to my mind, the implication, so this to me is a governing price pattern. Even though it happened 5 years ago, it has still been governing or dictating prices. So the low here was 160, and here we're trading at 197. So we're 3,000 pips higher. It hasn't been elegant, but it has been, going higher. But once I understand what the core trajectory of something is, then I constantly look for opportunities to get in sync. And so to me, this was another double bottom on the weekly charts. And I said to our members at the time, because this thing came down so hard, so fast, so far, that when you have a bottom, you just don't, kind of careen, lower like this and then do that. It takes a while for the market to start turning around in the other direction. So in order to reverse this massive thing, it had to, create some distance. So you have to kind of create space and distance away from that core downtrend to then start going up. But, at 185, I told our members we bottomed, and that, every pullback should be looked at as an opportunity. And you can see on the weekly, we had these trades where made a new low, close on the high, made a new low, close on the high. So these weekly bars were pointing in the direction it wants to go. And then, it was going sideways for 2 months after I said it bottomed. Few people believed me. Some did, I suppose. I've been sitting in this trade since 193.37 on March 5th, bought it somewhere in here, and, just endured, this up and down, vacillation. And then last Wednesday woke up where, went from 193 to 196, so that's the thing with trading, is that, you spend 2 months, what looks like frustration, finally you chuck it all in. And then in, one day, it does everything that it's supposed to do. And you can see now we've hit, a bit of resistance right at this resistance level. So this is kind of a normal place where it, should just consolidate. But I would, look at this as an opportunity to keep buying. So, see where the weekly bar closes. But to my mind, this is still looks like it's going to go much higher based on my observations of the weekly chart. So again, to me, it all starts with, what is this chart doing? And this one's a difficult one, because if you look at this, it looks like that. It looks like everywhere and nowhere. Meantime, I've just made so much money shorting this and buying this, based on my observation of, how markets work, how price action works. And then just getting in sync, making just huge chunks of money, taking out the middle of moves like this. So you can see those moves take place over many weeks. You can see after a double bottomed here, I started getting long, and I got out right here in the middle of the pandemic at 211.87. Made just 3,000 pips on this move on multiple positions. And, again, it would. How I made that money, I was informed by something that happened many years prior. So I look at a collection of patterns and price action that puts me in the direction of these things. And then I look to take a piece of the middle. So these are large moves, much bigger than moves that happen on a 15-minute chart. I'm looking to take out 500 pips on individual trades by just taking out a piece of the middle. And the way I do that is looking at, what's going on, slowing everything down, and understanding what something is doing in the bigger objective. So when you look at a 15-minute chart, the market can go anywhere in 15 minutes. But if you're looking at a weekly chart and you slow this thing down, I can tell you where this thing's going. This thing's going here. So Panagoda says, what about your euro US dollar? So again, also on the weekly charts, several weeks ago, there's probably several people here who took my trade. I, said, get short the euro. Again, just based on the assessment on the weekly chart, where the euro got to a major resistance level. This 123 to 125 is a long-term resistance level. And then I observed how it, behaved at that resistance level, where all of a sudden you saw this double top emerge. So, when I look at these patterns, you see these patterns start occurring, but what, I try and do is to understand is this pattern real? And the way, it becomes clearer and clearer to me if this is real is by digging in and looking at the price action. What does this thing do? So you can see when it made an absolute new high, after this huge move, that then the market closed on the low, even though it looks blue. I'm sure you'll agree on this large range, it closed much closer to the low than it did the high. So I call that a key reversal. And when you see these key reversals at major areas, like here, when you made a key reversal here, made a new high, close on the low, made a new high, close on the low, look at that kind of move after you saw that observation. So the markets point where they want to go by view of these reversals. So you can see made a new high, close at the low. But they did that within the context of a huge bear price pattern. So now you have a double top with these key reversal price action. And I told our members to sell it at 119.37, right in here. Right after, it formed this neckline, which is simply a line drawn through the thing. It confirmed that this thing had topped out. And, I said my near-term objective, all the way back there was 115 to 116, right where there's some support. So you can see that we're now about 100 pips from support, in which case I would expect you get some kind of bounce. So if you're short, I would start taking off, half my position somewhere around the 116 in anticipation of a bounce. But again, I used this weekly pattern to take 300 pips. I got in at 119.37, it's 117.18. So I've got over 200 pips and I've been sitting in it for, 2-3 weeks. So again, this is a great example of how you use the weekly charts. Another chart that I'm looking at that, is setting up for a huge move. And I have made just an unfair amount of money on dollar yen on the, mostly on the short side, because it's made a number of bear price patterns. But, when something doesn't go where it's supposed to go, that automatically alerts me to something that, is going to happen on the opposite side. So here we have a descending triangle price pattern. And you can see a descending triangle is exactly what it sounds like. It's a sawtooth, where you make kind of lower highs. Every move off the bottom is lower than the last. But you can see now this is going to start violating it, where if we come above this 112, we're going to start making higher highs. And we're going to start taking out the cadence of this pattern. And so I've been telling our members to, get long these these yen pairs. And you can see last week, we made what I call an outside key reversal, where you can see we made a new low. So you can see this was the prior week. So last week we made a new low on the prior week, and then we closed at a new high. So it was what I call an outside key reversal. So you can see we made a new low, closed on the high of the week. I said put a buy stop here at 119.37, and now you're automatically put in the market. And now, let's see where the market goes. There's going to be some turbulence here. There's some resistance right here, but this looks like we're getting a paradigm shift in the yen pairs. The Japanese yen has been strong for decades now, and now we're starting to see a weakening in the yen. Now, for those of you who don't understand, when I say weakening, you can see that the yen is in the second position here. It's in what we call the cross position. So if the yen is going to weaken, it means that the dollar yen trading pair is going to get stronger. And previously, it was the other way around, where the yen was strengthening and the dollar yen was going lower. And that's been going on for a long time. But it looks like we are at an inflection point where we've broken out of this major downtrend line. And so this could offer a major trading opportunity. And again, all I'm looking at is the weekly chart. And then once you assess something on the weekly chart, so for instance, I said, put a buy stop there, put a sell stop somewhere under, unchanged. I usually give, a large amount of room, or usually under the low. So people say, well, I can't take this amount of risk. And all that means is that you need to reduce your profit, your position size. So if this is your risk and that's your reward, you can see how this is how you set up trades that will make you a lot of money. So typically, I won't do a trade unless I can see a 3-to-1 risk reward opportunity. So if I'm going to risk 50 pips or 60 or 80 or whatever it is, call it 75 pips, then I need to see, 250, 225, pip reward. So this way you're risking 75 pips to make 225. But it's a 3-to-1. So if you do the math and if you set up your trades like this and you're good at what you do, you can actually lose 72% of your trades. So people often ask me, well, what's your win-loss percentage? It's an irrelevant question. There are many times where I could send you 5 bad trades, risk a 0.5% on each trade. And then the next trade, I make 15%. So, out of winning 1 out of 6 trades, I can be up 10%. So you can actually lose most of your trades if you don't overtrade and you set up your trades with a 3-to-1 risk reward ratio. Ben says, I've been looking at dollar yen for 2 weeks now. Can you still get into the yen pairs, or would you advise not to? No, I think you can. It looks like there is a huge turnaround going on here. So Yen says, thank you, Mark. After 3+ years, I still learn from your webinars. Jens, thank you for that endorsement. I really appreciate it. So, that's really what I wanted to share with you today, is that if you drill things down and try and take a piece of the middle. So here is a trade that I made a couple years ago, now that I have this chart open. And this is a great example of how you trade off the weekly chart. So once I, kind of understood what was going on here, what the racket this game was, this pair was running, so I could see that this cadence was these lower highs against a common low, right? So I've been trading long enough, I can draw these patterns in my sleep. And I knew what was going to start occurring, long after that 2 years ago. Once I understood, this was a cadence of lower highs, once we came up here and I saw this double top, I said, we're going to come back and re-challenge this low. And that's exactly what I said to our members right here. And it was right here where on this particular week, you had a small inside weak bar, really small. It's the narrowest range that I've been able to observe for weeks and years, actually. I've never seen a weekly range this small on dollar yen. And so these little inside bars or narrow ranges, they look benign, they look innocent, but as you can see, they can spell, huge continuation or reversals. Because what it says to me when a market, coils like this and has this narrow range is that you had this huge up move leading into that bar. And then all of a sudden, the upward momentum stalled. And so what I said to our members was just put a sell stop underneath here at 111.61. Now, the beauty of this trade and why, my, trade execution methodology works so well is that, I sent that out on a Sunday and I said, put a sell stop at 111.61. And then you can see in the following week, the market opened and went higher. So, if it continued and went straight up, my sell stop's not triggered. I'm not put in the market. No harm, no foul. But by Wednesday, what happened was it went up. And then, in the middle of the night, 2 o'clock, I'm sleeping, whatever, my sell stop is triggered. And now I'm all of a sudden into a market where I, had a 250 pip move like right away. But, even though it fell 250 pips, my objective was down here. So I actually held that trade for 3.5 months. Now, easier said than done, because you can see there was 7 weeks right here where the market made a new low here, reversed, and then actually for 7 weeks went higher. And I said, you know what? I'm holding out for this. And I did. And, I took every piece out of that trade. I got in here and I got out there. And I'll try and find that for you, because again, I like to, kind of validate what I'm saying. Because there's a lot of people who make, a lot of representations. And, I like to just back up what I'm saying. So here were those trades back in, I think it was 2019. And I'll just blow it up. But this is a great example, again, right off the weekly charts, how I made a few bucks. Let's see if that works. Yeah, that'll work. So this was the trade, that I sent out. Actually went out, I think, on the 23rd. You can see it was executed 2 days later on the 25th at 111.61. And this was my take profit right into those lows. And so I got in April 25th and got out August 12th and held it for 3.5 months. And I think Tanya, your name was, who asked about, the additional fees. So these were the swap fees that I incurred in that trade. Remember, I had a 51 lot on this thing. So I incurred $46,000 over 3.5 months. But including that fee, I made over 300 grand by just sitting in one trade for 3.5 months. So instead of getting in and out 5 times a day, trying to steal, 5 pips here and 8 pips there, I made one trade, got in at 111.61, got out at 105.17 and made 650 pips. And you can see I quite like that trend. So I got in a whole bunch of other trades and made, a few bucks on that. And that was all off the observations of what was going on the weekly charts. So, I eat my own cooking. Whatever I'm telling you, I'm doing for myself. And this is the way that you can be a consistent winner over time. So Mustafa says, I am an elite member. Your mindset becomes so different. You're trading, not gambling. Matthew says, do you trail your stops along the way? Yeah, no, that's a great question. I do. But, I kind of give it a wide berth, and it all depends on what I'm looking for in my trade. So every trade is different. So when I got in here, my objective was to, get down here. My objective was that this thing was going to, seek a level consistent with those lows. And so when I got in here with a sell stop right there and a stop loss above there, that's the beauty of a narrow range bar, is that this was my risk and that was my reward. So can you see, if you do that just a few times a year, how that can just, change your whole trading? Where, if you make, 5 to 1, 6 to 1 on a few trades, that's how you become, a consistent winner. Trading in and out every day, you're going to blow your mind out and then blow your account out. So you have to slow it down and see the big picture. And so usually my objective is just to take a piece out of the middle. But I got in right at the beginning, and sometimes, with certain trades you can't tell where the trajectory is going to be. But by virtue of the way this chart, this is where my objective was when I got in here. And I held to my guns all through, sitting through this thing for 7 weeks. And so once I put my stop loss, you can see as I got into this trade, and I remember I was making like 250 pips. And then the natural thing is, okay, you bring your stop loss down so that, you don't risk your whole thing. And then, it then, gets taken out. So I remember I made 250 pips. And then this thing went up 100, 150 pips on me. But I didn't move the stop loss. I knew what my objective was, and I didn't want to, kind of surrender a trade just because of the noise, what I call these blips. So, short covering rallies are violent. When the market, goes down, is going down, the opposing moves are swift and violent. And so you have to give it enough room. And then once, this thing reversed up here, then I was comfortable in moving my stop loss lower and lower. But, I just frankly left it in there because I didn't want to get taken out of a trade that I knew where it was going to go. So the placement of a stop loss and take profit is a bit of an art. It's not a science. Sometimes you move it and you get taken out and then the thing goes in your favor again. So I try and keep my, my stop losses out of the way of the noise. And again, it really depends on where you get in the trade. So there's going to be greater noise here. If you take this reversal, and I started adding to my trade here, but you can see it was much further along in the trade. My objective on this, this add was much less than the initial one. My whole objective on getting out of the trade was here. So the trade that I had here has a whole different stop loss and take profit than the one that I got in originally up here. So it really depends where you are in the trade. So Matt says, wow, thanks, Mark. That takes guts. I can't wait to be that fearless. Now, everybody says it's guts. Everybody says, I can't understand how you can sit in these trades and, take so much courage. But actually, if you can see the pattern, if you can see what this market is doing, then, to me, it's kind of, it's easy because I know I shouldn't say it's easy. But that is the whole point. If you slow it down and understand what really is the controlling pattern. So before this recent move, this whole descending wedge was a controlling pattern that every time this thing bounced, made a double top here, I would short it. Made a reversal here, I would short it. Every time it made a double top here, I would short it. But here it started to do something very different. This was like it just couldn't make a move lower. It's like that beach ball. You push it, push it, push it, and then all of a sudden that energy just uncorks to the other side. You can see all the effort here. It just was very, very different behavior. And I was telling our members that, I usually, looked at every one of these lows as an opportunity to, to get short, but this one felt very different. And so, now the energy is going in the opposite direction. Steven says, how can we learn to see these patterns? This appears to be the key to the long-term success. You can actually go to my website, thepatterntrader.com. I'll put it in here. And thepatterntrader.com. Is that right? Yeah. And, look for the 21 power strategies. And that's a good place to start. Tracy says, hey, Mark, the recent inside day on dollar yen for the short underneath would have taken you out. No, not necessarily. Again, what I say to you guys is that you cannot just look at these. So what I think Tracy asked, she was alluding to, is this inside day bar or inside week bar? She said it would have taken you out. So to me, I look at key reversals and inside bars in context with the broader move. So you can't just look at it in a vacuum. To me, this key reversal is in context with what I perceive is a turnaround and an uptrend. So now that I'm kind of looking at that this is broken out, I am looking for moves that, will put me in the direction of the market. And so that little inside bar, wouldn't have taken me off the trail at all. In fact, I just, look at that as, putting a buy stop above there and, looking to add my position based on that. So You can't just look at an individualized key reversal and make a determination. You have to see it within the context of something. Not all reversals, mean the same thing. There was a gigantic reversal right here. You could say that's a key reversal. It was. Made a new high, closed on the low, huge bar. But you can see once you got right into this resistance that, now this key reversal was now, bouncing off this resistance and pointing the next direction higher. And that's what I do. I will take that bar and make what I call a counter trend play. So to me, the larger trend was lower. The major moves were lower, but there are certain times like this where the market makes a new low, closes on the high, and then, I'm going to surmise that we're going to come back to the higher end of this thing. Then I look at this though, and then look to take it in the different direction. So once I understand the cadence of the pattern, I just get in sync with that by using price action and understanding the pattern. So yes, Tracy, the yen, the dollar yen, the major trend has been lower. Let me put this in context. So this is the dollar yen. And I have just been making an unfair amount of money based on my observation of this larger pattern that occurred 5 or 6 years ago. This double top, exactly what it sounds like. Makes one peak, backs off, retests it, and now you've got a perfect M top. And that double top means that the market had topped, and when a market tops, it's going to go lower. And that's exactly what it did. Dropped from 126 to 100 over the course of that time. You also had a head and shoulders right here. It looks like a man and woman's left shoulder. The peak is the head. This is the right shoulder. And when it dropped through this neckline, it implied that we were going to go lower. And so this to me has been the governing price pattern. So even notwithstanding this, that double top head and shoulders was telling me, that I should sell every single rally. And that's exactly what I did for many years. But now it looks like that cadence is changing. You can see that, now it used to be sell the rallies. Now it looks like it could be buy the dips. So this thing is starting to break out of this cadence. And now, this descending triangle looks to be a continuation pattern, because actually it was a move that started all the way from 77. And so, for the last 6 years, this has been in a downtrend. So it was a sell the rallies environment, but you can see now things are starting to change. So we have, what I think is going to be a paradigm shift. And if things shift, they shift very quickly. Kathy says, does your pattern also affect the stock market? So I trade stocks on the same basis. I look at the weekly charts of stocks just as I do Forex. Like I said, you can apply this analysis to any instrument you want. So this is the QQQs. This is the Nasdaq. Let's look at a weekly chart, and you can see, let me just dial this back a little bit more. Yeah. So I'm going to kind of finish up here. I'll take a few more questions, and then I'm going to wrap up around 1:30. Let me just make this image a little bit bigger. Move this ugly guy somewhere else. And so this is the triple Qs. This is an ETF that, mimics the Nasdaq. And so you can see that the Nasdaq has kind of been observing this trend line, and that we've broken this trend line, this uptrend line. Now, this was the ascending broadening triangle that I was looking at. And you can see the key reversal. So this was the weekly reversal, made a new high, closed at the low, right at the top of this thing. I got short there and made a few dollars going that way. And so now, we're kind of collecting underneath this ascending broadening price pattern. You can see that there's a reversal right here that's kind of controlling it. And you can see how the action is really narrowed out. So when you see, you know, this tightening, it's a coil, it's a compression of energy. And now we're left to surmise where that energy is going to uncoil. And by virtue of breaking these downtrend lines, you know, and, you know, I think that we're still going to go lower. But in order to, you know, just not be hooked into a 15-minute range, you know, I'm going to put my low, my sell stop under this week's low, or even last week's low around 305, you know, actually under 310. If you put a sell stop under 310 on the QQQs, you know, it's a good chance you're going to go lower. Frankly, like I said, you know, I could make a good case for widening this out and looking at this as, you know, a very large ascending, broadening price pattern that looks something like that. And so if we, you know, come back down and retest this, you know, I'm going to surmise we're going to come back to the beginning, just like pound Australian, and probably a lot lower. So this is the guy to watch. You know, if we take that out, it tells you that the market's got a lot of momentum. But right now, this soldier is controlling the show. And this is just distraction. The last couple of weeks bouncing up and down between 310 and 320 until, you know, your eyes glaze over and then you lose all your money. But if you slow it down on this weekly chart, you can see there's been a guiding uptrend line. You know, Tesla bounced off this thing today. So all of these stocks have been hugging this uptrend line. And, you know, Tesla, you know, came back and retested it. And now, you know, we'll see what happens. Frankly, you know, I think that, you know, you're going to get a retest. And then if you get a failure, then you're going to get a huge, you know, shot lower. Close it, please. Sorry. And so, you know, that is the, you know, I think we're going to go lower, and all you have to do is wait. If this thing retests this line here, right there, that's about, let's say 305 on the triple Qs. I think you're going to go a lot lower. So instead of driving yourself crazy looking at a 15-minute chart, just put a sell stop order, you know, somewhere under there, and let the market, and if the market goes up, then, you know, you'll make another decision. But, you know, one day you wake up, you're in this market, and then, you know, all of a sudden you're put into a great trade. So this is the way to avoid the potholes. So sorry, I don't know where the chart is. Somebody said that the chart is behind my head. So I'm sorry if I can just X out of this actually. Whatever. So Brendan says, thanks for your time. I may see you on your master pattern trader. I just have to convince myself getting up at 4 a.m. each Saturday is a good idea. You know, look, these master pattern trader sessions are recorded, Brendan. So you can look at it at your leisure if you're a member, you know, anytime, you know, over the weekend. Arif says, thank you for your analysis and teaching, has helped me a lot. So, you know, I'll take a few questions now, but that's really what I was trying to convey. You can see that I've just made a ton of trades and a ton of money just looking at the, you know, the longer action. And you can see I put in a sell stop on Sunday on gold at 17.19, and we're trading at 16.85. I didn't have to do a million things, look at a million indicators, get in here, get out there. I got in once on Sunday night, and I'm sitting in a $40 trade. Dolly says, what do you think of Euro Yen? I think it's looks like it's, you know, also consistent with dollar yen. It's breaking out. So it's really at a formidable resistance level. This 130, 132 is going to tell a lot of the story. So how this plays out, you can see we've got a very narrow inside bar this week, and how prices start coming out of this is, you know, going to tell a lot of the story. you do have a key reversal here at the 131. So it's going to be interesting. The yen pairs are in the cusp. I mean, this is still very much in a downtrend. I thought the next move in this thing would be and will be lower. And, I kind of maybe still think that way. So if we break out of the low of this inside bar, it may just put us back into the direction of the trend. So these yen, pairs that have been going down for so long, I'm still not quite sure that they're ready to break that trend. So Marcus says, do you use a position calculator? I do. So there is a position size calculator that's very easy to use to calculate your, I should have had it up here. Let me just try and find it real quick. I'm not going to spend a whole lot of time. I'm just going to put the calculator in the thing, and so you can calculate your risk by using a position size calculator. Somebody asked about WRK, Michelle. This is a stock that I've recommended based on a very positive weekly chart. So I think that this is a real winner. It's kind of reversing here. I don't like to see, reversal makes a new high, close on the low, but I still think that this, just looking at this chart with just this history, I'm not even going to blow up anymore. Looks so unbelievably positive to me. So I made a ton of money on Lyft LYFT based on a long-term weekly chart pattern. I bought it at 46. It went to 68. And so what I see on WRK is this double bottom inverted head and shoulders. And you can see that we've, recently broke out of this consolidation. And, I love when, things break out and then they retest. When they retest and they're successful, they go much higher. So I would just put a buy stop above this week's high, 54.50. And, I think eventually this thing's going to go to 75 bucks. David says patience and price pattern is key, but reassuring training alongside in the elite members club is reassuring. So thanks for that, David. Margaret says thanks for the calculator. Is WTI going to fall like gold? I don't think so. I think there's a lot of resistance here, but I think it just looks pretty sideways. So there's just a ton of distribution at this 70. If you go way back, there's just a ton of selling at this 65 to 70. So you can see we got, to this critical resistance level, and now we're pulling back. As to whether we're going to fall like a stone, I don't think so. I think it's going to look probably more like this, where you just get jammed up. Actually, we're not doing any promotion on this, Don. I just did this to give you guys value. I'm not trying to sell you anything. If you, want to check out, some of our offerings, just check out thepatterntrader.com and /products or something like that, or services. We also have an elite membership, but that's only offered on a very selective basis, a couple times a year. So we do webinars for the elite, which is my daily, and everything I do, the elite members get that. Daya says, can't wait to be able to sign up, working hard to make those dollars. The tortoise wins the race, Daya. You got to think of this as a long term. I know people open up their accounts and, then they look at what, where their account is, every day or every week, and I try and say, where do you want to be 9 months from now, 12 months from now, 18 months from now? And so, I'm looking to just take out 2 big moves a year. I made 7 figures on silver last year. I made 7 figures on the QQQs. If I don't get another move till November, I'm good. I can wait. So Rico says this is a really great webinar, Mark. Thank you. You're welcome, guys. I would appreciate if you wouldn't mind if you have some thoughts about this or other things that I do. If we have a review website on a thing called Trustpilot, which is independently verified, and I would really appreciate a review one way or another. You can tell me if you had a good experience, a bad experience. If you had a good experience, you can tell me why. Would really appreciate. I know everybody hassles you to get reviews, but this really helps other people assess what I'm doing. If you liked it, Michelle, you're welcome. So Mike says the long game is something I'm coming to realize. Yeah, so when I look at a chart like this, a chart that, starts at 110 and drops to 0, I want to make money on the short side. I don't want to, every day figure out how am I going to make 50 pips out of this bar. When this thing dropped from 70 to 0, I told our members it was going to do that. I didn't think it was going to go to 0, but I thought it was going to go to $10 when it was at 70 because of all the prior chart patterns, the double top here, the double top there, the key reversals. I was telling our members right here, this thing's going to drop like a stone. And so when, I see something like this, I want to take something out of the middle. From 70 to 0, there's 40, 50 bucks to be had in there. And that's what I'm looking for. I'm not looking to wrangle, the next 15-minute chart, that looks like this, where you can't make, heads or tails out of what it's doing. It's going up, it's going down, it's a double top, it's a head and shoulders. It can look like anything. The market can go anywhere in 15 minutes. This doesn't give you any insight to anything. And so, if you look at the weekly charts, all of a sudden, all of the moves become apparent. So Terry says, you've changed me from scalping to a long-term trader. Thanks. Yeah, so scalping is, you're just gonna, get scalped in the end. Your broker's gonna win because you're in and out all day paying 2 pips here, 3 pips there for the spread. And you're missing out on the big picture. So you have to see the forest for the trees. And, this is just my mindset. I just want to make big money. I'm not interested in trying to, make 30 pips 3 times a day. It's exciting. It's a distraction. But at the end of the day, when I see something, it pisses me off if I see a double top or a double bottom or some pattern and the market makes a huge move and, I've just, scalped a small portion out of it. So I just learned that, and it could be 2 moves a year. And so it's easier said than done. I'm telling you this, you're all excited. Now you go and look at the market and now the market doesn't do anything for 2 months and you're going, I just want to trade. I want to do something. And so it's easier, said than done. So John says, thanks, Mark. I've learned so much from you in only 2 weeks. Love your style. I'm a newbie and was following another guy that had me so confused. I was too afraid to make a trade. So thanks for John. Again, if you want to share your experience, I would really appreciate it. I don't know if I actually put that link there. I don't know if I put the link. So I don't know if I did or didn't. I'm just going to put it again. So if you'd like to share your experiences, I would really, good, bad, or indifferent. Panago said, I already did a review. Carol says, always great explanations of the graph. Thanks, Mark. Yeah, I put the link. I think I did put the link there. Neil says, what about individual stocks and weekly charts? So again, I showed you WRK. Anything can be analyzed on a weekly chart. Interest rates, anything. I look at This one, LQD, this is, you know, telling me if there's problems in the corporate sector. So you can analyze anything. This is an interest rate chart. You can see the double top here, and this is what's been going on in long-term interest rates. Tanya says, how much do you recommend you need in an account to follow your recommendations? So you don't need anything in an account. You know, this is an education service. So if you sign up for my, you know, education, and even if you don't have any money, but you learn something, and when you come into money, then you can apply it. I know that's self-serving, but, you know, the question you have to ask yourself is, how much is knowledge worth? And to me, there's nothing more valuable than knowledge. So whether you have something in your account or not, if you want to pay to learn, then that's entirely up to you. All right, guys, I think I'm going to end it there. Thank you very much for showing up. We had over 218 people on this, probably more. So David said, oh my God, today is an amazing value. Thank you, David. I appreciate it. Again, if you want to share that with others, I would appreciate it. All right, guys, thanks a ton.